What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. Now, specifically in today's episode, we have to talk about the fact that we saw exactly what we expected yesterday within the S&P 500, which was immediate rejection from its major resistance here. As you guys can see on the S&P, we saw prices come back up to retest top resistance, which would most likely result in a correction back to the downside because this is quite a strong resistance level for the S&P 500. And honestly, I don't expect us to break through this anytime soon, but we'll have the answers this week, as this week is extremely important if you watch my video yesterday. Now, what we saw was the rejection, which caused other cryptocurrencies to see rejection too. As you guys can see, we've seen a continued dip back to the downside here as we retested neckline on Bitcoin, which resulted in prices dipping lower. We even have Ethereum retesting neckline here, which resulted in prices dipping lower. And this same thing applies itself with XRP. You can see for the most part, this one's a little more difficult. Neckline was up here. We actually weren't able to make it that high, but regardless, we've also pulled back down to bottom support. Now, this is pretty much what we're going to be looking at, is all these cryptocurrencies trying to figure out what's to come. We also have a lot of interesting information coming out this week in regards to CPI data, in regards to earnings potential, or the projected earnings for second quarter for pretty much all the major companies out there, as well as GDP information comes out, maybe not this week, but this month for the second quarter, which are going to pretty much declare whether or not we're in a recession, how much longer these markets are going to be moving to, where the markets are going to be moving to, so on and so forth. I also have an article that I want to show you guys, which talks about the rising interest rates are crushing the U.S. housing market, as you guys can see here. I'm actually making a video, which is cool, on my second channel about this, which you'll probably find quite interesting. But with that being said, guys, today's video is once again brought to us by 1inch. Hopefully remember 1inch from previous videos here on the channel. We've talked about them quite often, but basically 1inch is a one-stop access to decentralized finance. As you guys can see, they have 245 liquidity sources, 224 billion plus total volume, 3.1 million plus total wallets, and 19.7 plus million total trades. As you guys can see, they have tons of different exchanges as well, or different types of DEXs that they offer on different networks here: Ethereum, Gnosis, BNB, Avalanche, Polygon, Arbitrum, Optimism, Phantom, which some of these I haven't even heard of. But what's cool about them is you guys can see never-ending liquidity, 1inch DeFi wallet. They have lots and lots and lots of products, which we'll talk about at the end of today's episode. But what's awesome, which you guys probably don't think is awesome, is gas fees here on Ethereum. Trading Ethereum costs a lot of gas fees, which is honestly probably one of the main reasons why people don't use decentralized exchanges. But what's really cool is 1inch is now offering something called a refund, a gas cost refund. And as you guys can see here, they're offering 10 million tokens in 1inch, which they will refund back to you depending on what exactly you do. So if you stake a certain amount of 1inch tokens, they will give you a certain amount of refund back to you, even up to 100%. Which is really, really cool. So more information about 1inch will be at the end of today's video. Definitely stay tuned for that. And with that being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So guys, super quick, as you guys remember, I did just launch a brand new finance channel, as you guys can see here, which is also linked in the description. I dropped a video which talked about the car market bubble popping, and now I have a video I'm working on this week, which will be talking about the housing market. And I don't want to spoil the whole video, but I will be touching upon that a little bit today and how this will affect other things with this article here, which talks about the rising interest rates, so on and so forth. But with that being said, definitely make sure to go sub to this other channel, which I've linked in the description. But diving into the technical analysis, you can see top 10 cryptocurrencies are pretty much, once again, all consolidating here, if not starting to crack downwards. Overall, though, in the past week, we haven't really been seeing any movement, at all, except for 24 hours, which is starting to see prices decline lower, 3%, 6%, 2%, 4, 3, 4. That's about average what we're seeing right now, a 3.2% decline here. And as you guys can see, most of the cryptos are starting to crack lower. We're actually seeing the S&P 500 kind of dip up today, which is quite interesting, and we'll see how we kind of react today. I'd be very shocked if we break through this. I'd be very happy. And honestly, by the projection that we made yesterday, there's a chance that by the end of this year, we will be through this resistance, which will be quite interesting to see. But ultimately, right now, I do believe there's a chance we're going to continue to dip lower or hit here and then dip lower. And that's pretty much where I'm settled at. As you know, we're still waiting on the way these major cryptos are forming, whether or not we're going to be breaking through our price floor. or whether or not we're going to see what could be now some sort of triple bottom formation here. This would be a confirmed triple bottom. So there's a lot of big things happening right now. As you guys know, this is what a triple bottom looks like. Let me just pull this up. Triple bottom stocks. Let's see if we get that, and we can just get images. Here we go. So as you guys can see, triple bottoms typically look like this: one low, two low, three low. We hit the neckline breakout and then see a swing to the upside, and the breakout to the upside is about the size of the neckline resistance where the breakout point is. So just like that, if you could see this here, looking at things like XRP and these other cryptos, that's what we're kind of dealing with. We're looking for a breakout of the same stature and size. So if I was to draw this neckline run right here, we would pretty much be breaking through that, swinging us up to price target, which is exactly where we expect cryptos like XRP to move to. Exactly right here at this moving average. This is the expected run. So what we're looking for is confirmation. One, we have two. This could be a third if we swing up, break through neckline, which would be here, and we would see a run up to about 48 cents. That's where price target is confirmed at. That's what we believe price target will be moving to. But it all depends on how we react with this here. We might be able to enter a trade very, very, very soon, depending on how prices react right now with bottom support at 30 cents. If we see prices of XRP break us through 30 cents right here, this is going to be a very easy short to the downside, so get ready for that. There's still room now, which is scary, on the relative strength indicator, considering we're trading at 37 on the RSI. If we see prices break through 31 cents on the daily charts as a conservative trader, we will short this to the downside, which we'd obviously use on BitYard. But these other cryptocurrencies as well are starting to see a similar pattern here. Ethereum got clearly rejected off its top resistance now, once again forming what could be a triple bottom as we get close to retesting this. If we see confirmation, a breach above neckline once again, we would expect to see a confirmed rally up to this resistance here. They're projecting if we take the neckline size, it wouldn't be that big. It would be about this. Or if we take percentage, there's a lot of people that give different ideologies in regards to the size of the run. This is a 24% run, but if we take it here, it's not 24%. 24% would be right around here, which isn't necessarily near where we expect target to be. I personally believe it will be closer to about this moving average, so right at about 1730 is where I believe I would see a breakout on Ethereum if we break through this major resistance here. But that's pretty much it. I do not like to trade inside here. This is a very risky and aggressive trader. If that's what you're trade, and if you're into that, and if you are an aggressive trader, then definitely consider trading something like this. Otherwise, we confirm the only times we'll buy is either here or here. If we break through this, we long. If we break through this, we short. It's literally that simple. Same thing applies itself with Bitcoin. Bitcoin is pretty much stumbling here, exactly like we said with XRP and exactly like we said with Bitcoin. What we're waiting for is a break above resistance. If we can swing above here, then I believe we will see a long to the upside. If we break below support, then we long or short to the downside here. It's literally that simple. The other thing with Bitcoin is what we're looking for is confirmation above not only this resistance, but the downtrend too. We confirm above this, we expect to see a run up to $28,000 to $32,000 short term. And I'm quite excited, and hopefully we do play out like that. But vice versa, we close below 18.8, we see an immediate short opportunity to the downside. Lots of things will be answered this week. I believe we'll have our answer this week, and we'll probably enter a trade this week, so definitely stay tuned for that. Lastly, I just wanted to talk about this for those that are going to be affected by this housing market. As you guys can see here, the main topics are, you can see Palacio's view. June survey highlights three main issues for the housing markets right now. More new buyers are canceling because we have, mortgage rates moving up. They were at a peak 6%, then they fell back down to 5.3%. There's a good chance when the Feds increase, which should be July 13th, or at the end of July, they plan on raising it up. I think July 27th. So it's either the 13th or the 27th. They plan on raising interest rates by another 50 to 75 basis points, which we'll see. And that will ultimately swing the price of mortgage rates up once again, probably back or higher than 6%. Price cuts are widespread. Why is that happening? Because less people can afford housing, which is causing houses to drop. Falling demand is cooling down construction cost pressures. As you guys know, there's a lot of new housing and construction being built across all the Sunbelt states, as well as all the major areas people are moving to. And, builders are getting worried that they can't afford to build these because people are not going to buy them. It's a lot of stuff to talk about, and all this information will be spoken about at the end of today's video, on my new channel, so definitely stick around and check that out. So guys, with that all being said, I'd like to talk a little bit more about 1inch with you. I want to give a huge shout out to 1inch for partnering with me to bring us today's episode. Now, as with all cryptocurrency projects, please remember to do your own research and never invest anything you are not comfortable with losing. All right, guys, so at this point, you should all be familiar with decentralized exchanges, and you would know that DEXs have their own perks compared to centralized exchanges. But what's even better than a DEX is called a DEX aggregator. Now, 1inch is just that, a DEX aggregator, and 1inch actually allows you to easily exchange your favorite DEXs simultaneously. Now, with their varied advantages over their centralized counterparts, namely self-custody, enhanced stability, listing autonomy, and coin diversity, decentralized exchanges have become increasingly common among users. However, some of the big drawbacks come in the form of low liquidity, with thin order books that lead to high slippage and costly cancellations of transactions. And at any given point across decentralized exchanges, prices and transaction fees can vary significantly. And rather than having to manually check and compare prices across exchanges, 1inch actually collects the real-time pricing data from various DEXs to allow traders to identify the optimal price across the market and capture the trading opportunity within a single platform. Now, some of the popular exchanges that 1inch aggregates data from are Uniswap, Paraswap, SushiSwap, OX, Kyber Network, and even Balancer. Now, 1inch exchange is a DEX aggregator that is non-custodial and seeks to fix the thin order book and front-running problems. Now, what's cool is 1inch exchange does not charge any fees for withdrawal, and as the exchange does not deposit the funds, there is no withdrawal or payments associated. Now, 1inch exchange does not levy any fees on the purchase, although the gas fees are applicable to the user, which I have some great news about. Now, as any transaction is done on the Ethereum network, all transactions involve the payment of gas charges. Now, the 1inch Foundation has made a decision to compensate gas costs to the 1inch DEX aggregator users. And the 1inch team was thrilled to announce that on September 1st, last year of 2021, the 1inch Foundation began the distribution of 10 million 1inch tokens as gas consumption refunds to users who will stake 1inch through the 1inch D app. Now, initially, the idea of such a gas refund program was proposed by the 1inch community members through the 1inch Network's governance forum, and the spent gas amount will be refunded in 1inch tokens on the first day of each subsequent month. What's even crazier is since September, 1inch actually managed to hit their 10 million 1inch token goal for the gas refund program. With that being said, they've now started their second distribution of the 10 million 1inch tokens and have currently hit about 800,000 1inch tokens for the gas refund program. So definitely make sure to take advantage of this with the links down in the description below. And the 1inch Foundation has also developed a simple system. Now, to be eligible for monthly gas refunds, 1inch users need to stake 1inch for the whole period between the first swap in a month to be taken into consideration and the day of the gas refund distribution itself. Now, the amount of staked 1inch tokens is also important to them. Now, staking of 100 1inch allows users to actually get 25% of a gas refund. Staking 1,000 1inch gets you 50% of a gas refund. Staking 10,000 1inch tokens gets you 75% refund, and staking 100,000 1inch gets you 100% gas refund. Now, lastly, as usual, remember to take advantage of their referral program, and if you want to earn some passive income, check out their mobile app they have recently developed. So guys, also, if you want to save on gas fees or just save money, I definitely recommend the 1inch platform, which I've linked down in the description below. Otherwise, huge shout out to 1inch for partnering with me, and as always, make sure to smash the like button for the YouTube algorithm, turn on post notifications, subscribe, and I'll see you in tomorrow's video. Peace.